gold's going to be hard to exchange. So you're going to need a little bit of gold and a lot of silver.
At the end of the day, as you mentioned, the only reason the dollar has value is because it was originally pegged to gold, and gold is really still the true money. So you mentioned also with Lebanon, what's happening there is that in dollar terms, the price of everything is falling. So in this environment, if we do see hyperinflation or whatever sort of endgame we end up seeing, if you hold gold, the real money, you'll probably be able to buy a whole lot more things. It'll actually be a deflationary environment with respect to gold. Is that correct?
Yeah, absolutely. Look, if you're a Lebanese and you own dollars now, you're doing pretty well. But come the day, and those Lebanese that have those dollars, they're not going to be able to buy anything either. So if you're in Lebanon and you're stacking gold or silver, probably silver would be easier, because if you want to buy food, gold's going to be hard to exchange. So you're gonna need a little bit of gold and a lot of silver. And if you hold that, then yeah, you can acquire dollars with that. That shouldn't be a problem. It's just one more step if you need to have dollars to buy your food. But the Lebanese are going to go through another round of hyperinflation when the dollar falls, but so is the whole world. So what's going to happen in the end game is basically what's happening in Lebanon, but in the whole world. And instead of dollars, the dollars are going to be gold. So if everyone is holding dollars and those dollars are no longer worth anything, then the world needs a liquidity to trade with. It needs a money. And according to the Austrian School of Economics, liquidity is money. It's the same thing. So when we become Lebanon, then everyone who owns gold is going to be able to buy their consumer goods really, really cheaply, including real estate and almost everything. Almost everything is going to be devalued against real money, because in a world where most people don't have money, the division of labor can potentially break down. So you need the economy, the global economy this time, not just the Lebanese economy, but the global economy, to incentivize as much as humanly possible to get that money circulating again, to maintain the division of labor or whatever is left of it. Otherwise, we could really see society break down. We're not going to see that, because the prices the things that you could get from exchange of gold and silver are going to be so radical and such a good rate that people are not going to be able to resist. That's what's supposed to happen at the end of these cycles, right?
So typically when we've seen hyperinflation, like in Zimbabwe, or I assume Lebanon as well, kind of modern day hyperinflation, a lot of people will turn back to an alternative currency like the US dollar, use that instead. But if the US dollar experiences hyperinflation, there really won't be any alternative, right? Because the US dollar is the world reserve currency, right? So if the dollar has trouble, then all other currencies would seemingly be in trouble as well.
Right. And if you just expand what has been happening since 2020, just monetarily, right? The Fed prints a whole bunch of money, expands its balance sheet, and then all of the central banks, they're pretending to be wise on their own and do what they need to do independently for their own countries and their own territories, but really they're just following the Fed because they have to. We're seeing the same thing now. The Fed is pushing up interest rates and putting the brakes on the money supply, and so are the other central banks. They're raising interest rates and putting brakes on the money supply. They're not doing anything independently. Really, the Fed is the central bank of the whole world, and everybody follows it. Why? Because these currency regimes, they have to keep their currencies in a general trading exchange window in order to maintain their economic structures as they have been, or else there's going to be a serious upheaval in their countries where the exporters are going to complain, the importers are going to complain, people are going to lose their jobs, and things are going to have to be reorganized. It's like telling your kid to clean your room, and they don't want to, because it takes a lot of energy. But there's a lot of garbage that is built up in all these economies, and all the central banks are following the Fed. So when the dollar falls, meaning to expand that out, when the dollar starts to hyperinflate, it's not like the euro is going to do so well all of a sudden. If the dollar hyperinflates and the euro and the ECB decides, okay, we're gonna raise interest rates and strengthen the euro while the dollar collapses, then the entire trade flow relationship between the EU and the United States will reverse, and that's going to disrupt the entire trade system, and these politicians are not built to handle that, so they'll just all hyperinflate with the dollar.
Now, we've talked about before the banking crisis, and I wanted to see your perspective on how these latest developments we've been seeing really tie into this, and kind of show that we might be headed closer to the end game, we saw two banks, one bank take over Bank of California, or PacWest was taken over by Bank of California, and then we saw a small Kansas bank fail in the last couple weeks here. Your perspective on the ongoing banking crisis and how it ties into all of this.
So PacWest, if I'm remembering this correctly, I saw it out of the corner of my eye. I was following the stock price because that was the next bank to fail. So if I remember correctly, what happened with PacWest is they released their earnings, and it was like it blasted their expectations. It was a great thing, and then the stock price went way up, like 20% or something. And then it was either that day or the next day or 2 days later or some very, very short amount of time later where there was a press release they were being sold to the Bank of California. So like, what was that earnings statement about? Like, okay, so they had great earnings and whatever, and the shareholders are really excited, and the high frequency trading algorithms go crazy, and they push the stock up 20%, and then all of a sudden there's a press release, we're selling ourselves to the Bank of California, goes back down. So what does that tell me? That tells me that you can't really trust any of these earnings statements from any of these banks. Why? Because they're the engines of inflation. That they make money through the inflationary process. So their earnings themselves are really nothing, because we it's hard to even see what's going on behind the front end earnings statement, the two-dimensional. Okay, we earn this much in this sector, earn this much, and we have this much dollars now more. But like, they have all of these inflated assets on their balance sheet that could collapse at any time, which is why PacWest sold itself to Bank of California, because despite their amazing earnings, they couldn't survive alone. So but that's the thing with banks. We saw the same thing with Silicon Valley. Like, it was fine, and then one day there's a press release and it's zero. Okay, that's the nature of these inflationary engines. You can't trust what they actually have under the hood, because when you come, the most basic thing to keep in mind is these banks have no money. They have paper that they shuffle around. And when the paper goes up, they say, oh, look, we have earnings. And when the paper goes down, they lose them all and lose everything. That's the nature of an inflationary system. It's all an illusion. That's it.
It's all an illusion. So you're saying it's an illusion because it's not based on gold. It's not based on anything real.
Yeah, that's why. Well, as the engines of the inflationary system, these banks are the sources of the mirage. So they're like closer to the blast radius, so to speak. And when the inflationary system kind of eats itself, they're the first victims. So you could say the same thing in the ripples out. The biggest companies get hit the most, if we're talking about the FANGs or the Googles or the big tech or whatever, and they're the first to like really fall hard in a recessionary implosion. And then the ripples go out and out, and then the blast radius from the banks ripples out to the smaller and smaller companies, and all these stocks go down. But the closer you get to the consumer sector, the better things are. And the closer you get to the banking sector, the worse things are. It's an explosion. So the ones to be hit worst by that explosion are the banks. And in this case, it'll be the central bank itself. Like when the Fed really goes bankrupt, which it already is, it's just we're waiting for the results of that to manifest themselves. When the Fed goes bankrupt, all of its banks go bankrupt, and then every company that has dollars go bankrupt. The only companies that survive are the ones with a store of real money, of gold and silver, somewhere in a safe or in their accounts or whatever they hold gold and silver in, or any company that has real assets that it can trade for real money. But if they don't have any of that, and they're just dependent on the inflationary dollar, they're going to lose everything, and then their assets will be sold off.